Nasdaq, at the moment, I've got a little bit of a downtrend there. As you can see, those are the levels in blue. Um, what can I say? You know, the stocks at the moment have just been that they're just treading water. Everyone's nervous. No one really knows what the outcome's going to be of the actions of the central banks, and you know when inflation is going to turn that corner. Personally, for me, I think inflation's topping, but that is just my view. Nasdaq 30-minute. So here we are again, identified a couple of support levels and a resistance level for you there too. Moving on to the Russell, you know, so as Nasdaq is the tech companies, Russell is the small and medium cap companies. Here, you know, it's again just treading water, same following what the other stocks are doing for the moment. It's, you know, obviously the small and mid cap companies are much more sensitive to what the consumers do. The bigger companies can absorb a slowdown in sales, but the small and mid cap companies are much more sensitive to any change in consumer spending. Here's the 30-minute. So again, you know, if it opens and has a little run on the upside, it's going to test those resistance levels. But of course, it may not do. It might just range trade tomorrow, waiting for data and for the Americans to come back in the market on Tuesday. Moving on to currencies. So here's the pound against the dollar in a downward trend still. You know, I'm in the UK. I just can't get bullish on the pound. I really can't. Economically, you know, we're not in a great position. We've got high inflation, and that is a danger to the UK. In the past, that's almost become what was called spiral inflation, where it really got out of control. And again, you know, it's going to be a question of as these raw material costs come down, are the companies going to pass that on? Or are they just going to buffer that and just take the extra profits for themselves? Because if they do, then that's going to hold inflation up higher. And we'll probably get a little bit of an idea of what's going to happen there once there's the sort of second quarter results start to come out. So that downtrend for me there. Again, you know, I've stretched it out a little bit so you can see when COVID hit, how far down it went. So that's the lowest level that I've marked off there, just below 115. Can it get there again? Probably at some stage. It's really going to depend on what the Bank of England can do and what happens with inflation. This is it on the 30 minutes. So, you know, we did see that sort of late afternoon recovery. Whether it can sustain that, I have my doubts. Moving on to the euro, again, just the eurozone. It's promising some action, but we haven't seen anything yet. Again, so I've stretched it out. This one actually goes back to the you know, the beginning of the euro as a tangible currency in 2000, 2001. So they've got that chart all the way from the beginning. And you know, you can see now where it is. And okay, it might find a little bit of support short term at these levels. But if it breaks through, then again, you know, the euro is not one that I can get bullish for. But you know, for the last 2.5 years, I've been bullish for the dollar. So I'm not going to change that view short. Well, for probably not this year, I would guess. Here's the 30-minute. So a bit wide for the support and resistances there. But, you know, as you can see from the pivot points from Friday, it started probably to about midday above the pivot, and then once it broke, it went down. And it broke S1. It never got to test S2 though. And of course, later on, it made that recovery. But this week, we're going to see the dollar move. Obviously, with the data, we'll have to wait and see Fed minutes and, of course, non-farm payroll. Here's Bitcoin. For the hodlers, they're going to be disappointed that it closed on Friday below 20,000. It's just struggling to keep up there at the moment. You know, 20,000 seems a fair price, but you know, if it starts to break on the downside, then the next levels could be 17, 15, and if it breaks them, it could get all the way back to 10 or 9. You know, I'm not saying it will do, but I'm saying there is that potential at the moment. You know, which is it's you know, there's a lot of people long holding on to these, hoping that it's going to have a bounce. And of course, you know, the sellers come in from all different directions. And of course, you know, for people that have got to pay bills, they've got food to buy and petrol to buy. Uh, Holding crypto can be a bit of a luxury at the moment. You know, they've got to prioritize their money for sure. So this is the 30-minute. You know, spent most of the day above the pivot point, and it sort of came down, but it held above the pivot point on Friday, so that might just give a little bit of comfort. Obviously, the crypto markets are open over the weekend as well. Here's Bitcoin against Nasdaq. So again, you can see that correlation is still holding in. Never perfect. It's a loose correlation, but as you can see that, you know, it's pretty, it's there. And it's not going away by the looks of it at the moment. So, you know, if stocks start to crash, that's going to put pressure on Bitcoin. If stocks can rally, that may take a little bit of the pressure off of Bitcoin. So on gold, you know, it sort of had that sell-off, which I was really surprised at. But I must admit, I enjoyed it because I managed to pick some gold up just over 1786, which was a very nice trade on Friday. And you know, for me, I've got my zones that I deal in, and for me, I've had this for quite some time. Once it goes through 1780 on the downside, between 1780 1750 is also always my sort of buy zone, and I buy call options there as well. So obviously that limits my risk. So I'm not recommending that to you. I'm just telling you what I'm looking to do. And you know, I saw that opportunity on Friday, and you know, if stocks keep going down, gold is sort of an inflationary trade. Gold is a haven trade. So it's interesting why it's under so much pressure. But again, people may need to release their capital from their gold holdings, and of course, you know, possibly another pressure may have been from the sale that Russia made the other week to Switzerland, buyers in Switzerland. I'm not sure it was the government. So here's the gold 30-minute. It spent the day down under the pivot point right until the end of the day, where it managed to come back up and close just pretty much on or just slightly above the pivot level. And that's, again, you know, it's going to be another of those wait and see weeks. But yes, good opportunities on Friday for sure. You know, it's different for everybody, and you know, I'm fortunate. I've got practically 50 years in the market, so I'm using not just sort of my technical analysis. I'm also using my sort of macro, my fundamental knowledge, and quite often, a lot of the time, I use my gut as well. You know, and I use that as my overriding factor. Here's WTI. Traded a lot of WTI. As I say, I used to be a market maker for the energy exchanges, so I'm very familiar with it, very comfortable with it. Can read it quite well, so that's always an advantage. I've got different strategies that I use depending, and as we can see from there, you know, it got it back up to that sort of 114 level this week. Couldn't hold that. Dropped all the way back down to sort of 105 level. And you know, it's just holding there. What I'm seeing at the moment roughly is the each week that there's it established about a $10 range. Of course, it's not going to keep doing that, but it is at the moment. So, of course, you don't know where to start and finish of that $10 range is at the moment. And this is the 30-minute. The pivots are on there as well. So first half of the day was below them. When the Americans came into the market, they pushed it a bit higher, got above the pivot point, and then it just traded between the pivot and S1 for the rest of the session, closing in the midpoint. You know, again, it's just going to take a day or two to get the markets going this week because of the holiday tomorrow. So that's pretty much it. Just want to sort of highlight what we provide as well as this. Obviously, we love doing this for you guys, so it gives you a bit of an insight. It gives you sort of helps you to get your week going as such. But we do offer a lot more. We have the daily newsletter. So, you know, what I'm showing you now is sort of not levels that are going to last all week, but in our daily newsletter, we've got fresh levels on a daily basis, including the pivot points. And of course, apart from that, it's got global news, my views, so there's plenty in there. And if you want to subscribe to that, or you want to get a free trial, that's no problem. There's the details underneath the link. Then we've got workshops, courses, master classes, you know, whatever level you're at, we've got something to help you to progress. If you're at the beginning of your journey, we can certainly help you to establish and put you on the right road. And then on top of that, we do trader mentoring, and you know, that's just to help guys that are already trading, just to help them reach that next level each time. And we do lots of consulting to a variety of different sort of areas, and that includes, you know, some of that's in educational, others hedging and such like, and that's exchanges, brokers, and individual companies as well. Contact details, any questions you've got or observations, info@symaxfintech.com. If you've got any questions for me personally, I've added mine on now, so you can aim directly at me, which is chris.tubby@symax-int.com. Hope to hear from you. We love positive, but we take negative comments as well, because that way we can improve. So I wish you the very best of luck for next week. Have a great one. If you are out in the US, have a great day tomorrow. Happy 4th of July, and hope to see you again next week. Take care and bye for now.